Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. As we all know, for those that have been following this channel, we dedicate it a lot to doing top-down analysis of different financial assets. And today we're going to be looking at a Deriv synthetic index jump 75 index. For those of us that do not know where to get this particular financial asset, it is offered mainly by the Deriv brokers, so you can check them out. They offer a whole lot of other um, financial assets, so which you can trade at any time. Okay, now also we all know that I like starting my analysis from the higher time frame, the monthly, the weekly, or the daily. So looking at the chart before us, we can see that the market seemed to have been going in the downward direction for a while. But however, if we look closely, we can see that when the market made a lower high here, this lower high has not been able to form what lower low for the market to continue downward. So that alone might be indicative that buyers might be trying to push the market upward. So we have like a low, a lower low, lower high, a lower low, lower high. So we've not been able to get another lower high. So that's all we can get from this particular time frame. So that takes us to the weekly time frame. Now on the weekly time frame, it's almost the same thing. There isn't much of new information for us to work with, other than the fact that we could see that when the market made this the last lower low, when the market made the lower low, lower high, the market went into a range here. Let me mark this out. Market went into a range for a while, broke out of the range, came back to retest the support part of the range, and then just went back up. So that will take us to the daily time frame. If we can make more of this information, or make more of what the market is doing most recently, especially in this area. So go to the daily time frame, and then I think we can get more useful information. So if we are to look at this portion of the market, we can see that the market made like low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then the market made a lower high but couldn't come back to make a low, but instead the market went upwards and made a high, a higher low, higher high, made a double top, came back down to give us like a low, a lower low instead of lower high. But this lower low gave us a lower high, but couldn't come back down to make a lower low for the market to continue downwards. Instead, it broke above the initial lower high to give us what, like a higher high. So what the market is doing currently on this daily time frame is like we're seeing like what, retracement. Also, for those of us that have been following how I analyze the market, I use three basic tools, which are the trend line, the Fibonacci retracement tool, and support or resistance zone. So looking at this right hand part of market on the daily time frame, which is the most recent happening on the market or in the market, we can say that to be safe to put our trend line here, because the market is trending currently in the upwards direction. So we have our trend line here, and the next tool I'll be imputing would be my Fib tool, from this swing low to the latest swing high. And also, I'd like to map out my Fibonacci retracement tool golden zone, which is the zone between the 50% and 61.8% mark. And to see, most times the test I give to this particular zone is that most times it aligns with what is support or resistance zone. How do I mean? We can see that this particular zone now in the past was price was rejected from the zone 1, 2, 3, 4, 5 for 5 days, because each candlestick on the daily time frame represents a day. So for 5 days, price was rejected from the zone, finally broke above it. Price tried to come back down. It was so this initial resistance that resisted price from going up now started acting as what? A support. So it supported price and pushed price upwards. So currently price is retracing towards the zone. So we're hoping that when price gets here, this zone, this golden zone, will be able to act as what? A support to push price upwards. Now, do we now stop here and just keep waiting? Let's see if we can get more clarity from the H4 time frame. Now, on the H4 time frame, we can even get additional information. Like I always say, one of the things that gives more credence to my support or resistance zone is if I can spot like a possible liquidity zone above it. And if we're looking at the H4 time frame, if we look closely, you can see that a head and shoulders pattern is forming above the zone that we've mapped out. What do I mean? How is a head and shoulder pattern forming? This would be my what? My left shoulder, the head, and the right shoulder. Now we know that a head and shoulder pattern is a bearish reversal pattern. In other words, that means that whenever this pattern arises, especially at a resistance level, then it's an indication that price is likely to go downwards. Now, this pattern, this is a neckline. Remember, we have like a strong zone which we've mapped from the daily time frame just underneath the zone. So, in my own thinking, I believe that price would likely use this place as a liquidity zone, in the sense that a lot of people might be buying from this zone, and their stop losses would be placed just underneath the zone. So, from my own understanding, I believe that price is likely to break this zone to come back into this zone that we've drawn from the daily time frame, and even make like a third touch of the trend line, and afterwards head backwards, head upwards again in its original bullish direction. So the question would now be, what do you do in order to take advantage of this market? I would say if you are very, very skilled, I would advise that if you are very skilled, you can wait for price to break this zone. So once price takes out the neckline of this head and shoulder pattern that we've just spotted, then you can wait for a retest of the zone and then take sell trades downwards. But because the market is trending upwards, I wouldn't want to do that, because anything can happen in an uptrending market. So I, for one, would just patiently wait for price to come down into this area, either this area, and then maybe probably make a third touch of this trend line. And when that happens, then I can start looking for what? Buy opportunities. So how do I look for buy opportunities? So when price gets into this place, I can look for bullish reversal patterns or bullish chart patterns. Bullish reversal patterns, like if price comes here to make a double bottom, or gives me like an inverse head and shoulder pattern, or like a bullish engulfing candle appears here, or a morning star appears here, then I can take my my trade. So this is a simple analysis for the Deriv synthetic index 75, jump 75 index. And if you come across this before this plays out, you can compare it also with your own analysis and strengthen this whatever decision that you would want to take in the market. So thank you for stopping by. If you are coming across my channel for the first time and you feel that this analysis makes sense to you, you can click on the subscribe button so you'll be alerted when subsequent videos drop. So like I stated from the intro of this video, this is a trading academy. If you are starting out your trading journey and you want to learn how to analyze any market, when I mean any market, I mean any market at all, using pure price action trading strategy, you can reach out to us via either our Instagram handle or on our WhatsApp and contact on the bio of this channel. Thank you so much for always supporting my channel, and cheers. Have a fruitful trading week.